Good morning, everyone. Happy Friday. Welcome to Cheddar. It is September 23rd. I'm Kristen Scholler. John is in Nantucket with Peter for the Nantucket Project, an annual conference that brings together some of the leading decision makers and thinkers in the area, which they're saying is to, quote, create a powerful distillation of ideas that will spark meaningful conversation and lead to meaningful change, end quote. So that was quite a description of the Nantucket Project there. Anyway, we're going to be back and forth between the NYSE and Nantucket all today during the show. Lots of live hits from John, great interviews coming up. But now I'm joined by Jeff Bishop and Jason Bond, both professional stock pickers. Guys, thanks for being here.
Thanks for having
us over.
Yeah.
Happy Friday. So let's start with the news of the day. We are a little early today, earlier than our normal time. But anyway, some breaking Twitter news. This from CNBC. The stock we saw pre-market is now up about 19% with the news that people are potentially interested, that there are some tech companies out there that have expressed potential interest in buying Twitter. Reportedly, these companies include Google and Salesforce, among other tech companies. A potential sale of Twitter is something that we've been talking about, and people on the street have been talking about for several months now. What do you guys think of this?
They've been talking about it for years. I mean, Twitter's been in a slow spiral to the bottom, and everybody's waiting for a buyout, so maybe this is it. Who knows?
It makes sense. They have a big platform. Somebody's going to be able to monetize it better than them.
Yeah. They're like the Yahoo of social media, probably. They just are destroying a business, but someone's going to do a better job.
So stocks up, maybe Google. So stocks up, as we said, 19% pre-market at about $22 a piece. That would put it at its highest level since late last year, highest level year to date. Certainly. Do you guys own stocks? You're stock pickers. Do you own stocks, or do you just recommend stocks?
We personally trade a lot of stocks.
Yes. We trade our own stocks with real money. I'm up 300% this year trading stocks. That's about $300,000, yeah. It's nothing like these big money managers, but for a small-time guy like me, it's a lot.
Are either of you in Twitter?
No.
I'm not.
No.
Twitter's only up 15%.
Yeah. We trade more volatile stocks than that. So.
Although some would say, maybe argue that Twitter is a little volatile from time to time.
Yeah.
Anyway, so, okay, well, we will see how this unfolds. David Faber with that report from CNBC. It's something that we will be following, but shareholders obviously optimistic on that.
I think as soon as someone puts their hat in the ring and says, you know what, we're going to buy this, then you're going to see probably 5 other bidders come right out. So if Google's saying they want to put a bid in, you'll see Apple, you'll see Microsoft, you'll see Facebook. They'll all come in and try to put a bid in.
Yeah, and we said several tech companies that they are that supposedly have expressed interest. Google and Salesforce, 2 of them, among some others.
Nobody wants to be the first, so now that it's out,
yeah,
we'll go.
More will come off the sideline.
Okay, all right. Well, in other news, the Yahoo hack that we covered yesterday is even worse than originally thought. The company said Thursday that at least 500 million user accounts were stolen in late 2014 in what may be one of the largest cybersecurity breaches ever. Yahoo says that it believes that a, quote, state-sponsored actor was involved in the hack, which may include names, email addresses, telephone passwords, date of births, hashed passwords, and more. And the incident was first revealed in August of this year when Hacker Peace advertised selling user information on the dark web. So I think the big question here is what would this mean for this pending sale to Verizon? Verizon bid $4.8 billion to buy its core internet assets, Yahoo's core internet assets. We know that this hack does affect that core internet business. So if you're
certainly will. If
you're a Yahoo shareholder, a Verizon shareholder, what's going through your mind right now, and what do you think this means for that potential deal?
Yeah. Just thinking, if you're Verizon, you just said you're going to pay $5 billion almost for this asset, and Yahoo had to have known about this before, right? This happened 2 years ago, so they had to have known about it, and for it just to come out now is so fishy to me. So Verizon's definitely going to try to leverage this deal and knock him down in price. There's no doubt.
And nobody else is coming off the sideline to buy him now. So Verizon's in
they said $5 billion
now.
Yeah. I bet they come in at least 10% lower just because they can.
So there were reports out that supposedly during this whole bidding process that Yahoo never really revealed or never talked about anything related to this whatsoever. There are also reports out that the Verizon representatives are a little upset that they haven't gotten much communication about this up until this point. I think, there will be an investigation into this.
Well, there will be.
What else is out there that they haven't disclosed? That's what I would be asking myself if I was Verizon or a Verizon shareholder. I'd be concerned if this just came out.
Sure.
Is there anything else?
And I think if you're a user too of Yahoo, why weren't you notified earlier that you should, change your password? Why in August was there not some blasted email or message out there that said, be sure to change your password, take the appropriate steps? As we said earlier, that's a lot of information that's been exposed. So certainly, I think now, obviously, no ifs, ands, or buts about it. Yahoo is saying take care of those steps and take the necessary steps. What stocks do you guys own? Or what stocks do you trade? Not Yahoo, not Twitter.
I trade ETFs typically.
Okay.
I'll trade a lot of leveraged ETFs. So
okay.
I trade.
Talk about volatility there.
Talk about volatility. So it's very short-term trading.
Yes.
We're typically holding for a day, maybe 3 or 4 days at most. So it's very short-term trading on leveraged ETFs. So that is volatile for sure. You're going to see 5, 10, 20% moves in a really short period of time. So that's a really exciting thing to be trading, but it can be very dangerous as well.
Yes, it can be very dangerous for our viewers watching. Those leveraged ETFs
It can be very dangerous.
act
Careful.
differently than regular ETFs, than regular stocks.
Yeah.
So yes, be careful.
And I'm a small cap guy, so even more dangerous than leveraged ETFs. I'm trading very volatile stocks, but quite successfully. Like I said, I'm up 320%, $320,000 this year. So I started with $100,000. I was formerly a teacher, New York State school teacher. So for me, that's a lot of money. It might not go a long way here, and I'm sure that a lot of people here aren't trading the stocks that I'm trading, but for me, it works very well.
So what got you into trading? Your summers off from teaching, just sitting around trying to
roofing
make
houses,
some money?
being broke as a teacher, yes. That got me into trading. And I had a knack for it, and I work very closely with Jeff, who's good at it as well, and we do a really nice job.
Put the volatility in perspective. So you're up 300% right now with some of these leveraged products too. I don't know.
We trade differently. So
Yes, I know you trade differently. I don't know what your returns are so far this year. But were you ever down at any point during this year? Talk to us about the swings so viewers can understand the magnitude of volatility we're talking about.
That's a great question. I can speak to that specifically. So we were at the Traders Expo at the start of the year, and we all know that the market had the worst 10-day open ever. I was down 22% in the first 10 days. I was long a lot of oil small caps, and that went very poorly. I rebounded from $78,000 up to about $420,000 where I am this morning in 9 months.
Wow.
And I traded live against the world champ at the Traders Expo up on stage in front of about 200-300 people, standing room only audience. It made $660 in 40 minutes. He beat me. He made $700. But for a former New York State school teacher, it's going well for me.
It's amazing about Jason. So it's pretty volatile, but he hasn't had a losing month this year.
Yeah.
He may have been down, like in January, he was down 20-some% in the first 2 weeks, but he closed the month positive.
Yeah, I cut my losses and I moved on. And that's really, with small caps, what you have to do. When you're wrong, and you're wrong big. If you can be right more than you're wrong, you just cut those losses, you move on. And that's how I've been able to build up to where I am today.
And you both still have full heads of hair. I'm impressed. All right, Facebook
Not as full as it used to be.
Yeah, and a lot of gray.
It was a lot darker at one time.
Has been exaggerating its video views by artificially inflating the average time viewers are watching, reportedly upsetting big ad buyers and marketers. Facebook was likely overestimating time spent watching videos by about 60 to 80%. That's according to ad buying agency Publicis Media. They were responsible for buying around $77 billion in ads around the world on behalf of publishers. In 2015, Publicis noted in a letter to clients that, quote, this once again illuminates the absolute need to have third-party tagging and verification on Facebook's platform. 2 years of reporting inflating performance numbers is unacceptable. And quote, so Facebook, a company that makes 97 in the latest quarter percent of its revenue from ads. What do you guys think about Facebook?
I think overinflating views is a big problem. First of all, Facebook's been a really trustworthy company. I think advertisers truly trust that they have the audience, that they have the targeting, and they're able to do all the things they say. It's an incredible platform. I think they're awesome. So this is a really big dent for them, I think. They're going to have to overcome this and really win back a lot of trust from their advertisers who believe in everything they're saying. So they don't make a lot of missteps. I think this is a big one.
We do a lot of advertising with Facebook, and it's going really well for us.
Yeah.
So while this is a setback, we see returns from our advertising there.
Okay, and you can hear the cheering behind us because as I mentioned earlier, we started the show a little earlier today. Valvoline, a company that is making its debut on the floor of the New York Stock Exchange. You see Tom Farley raising the crowd there. A lot of happy faces on the podium. Valvoline, ticker symbol triple B. It priced in the middle of its range last night at $22 a share. The range was $20 to $23, raised $666 million. We'll wait for the open here and hopefully give you a price indication soon. And the general markets are essentially opening flat. So quickly, guys, overall view on the markets. Do you take a view on the overall markets, and what is that?
Especially on the ETF side, a lot of what we trade is trading long or short the market or different commodities. So right now, I just feel like the market has very limited upside from here. It may continue to creep higher a little bit, but I just think it's got very limited upside. I still want to be a buyer on any significant dips like we had in the last few weeks, but I think it's got very limited upside from this point.
Yeah. And I sold some Russell 2000 calls, the small cap index. So after 2 days, a really big move. I think it's coming in a little.
Okay. And what are some stock tips that you guys can give investors? Now, investors obviously should take, you know what I mean, be very aware of what they're listening to. 300% return is pretty good this year. But there was a Facebook comment, I believe, that said, what are some stock tips? So if you're talking to an investor out there, what advice would you give them?
Specific stocks?
I would say maybe tips on how to pick the right stock or the right product if you're in ETFs.
On the ETF, what I always end up doing is having a thesis on which way a commodity is going to go. Like, for example, we had a big sell-off in oil and gold in the last few weeks, coming in with the potential Fed rate hike. So everybody was freaking out about gold. The run was over, and people were just selling it. I believe gold's going higher. So this sell-off we had in gold was a great buying opportunity about a week ago. And so we scooped up a lot of leveraged gold products. And after the rate hike didn't happen this week, that was just a great trade. And it was awesome. We made tons of money on that. So I think you've got to have a thesis of which direction it's going to move and then stick to it. But you have to keep reasonable losses because you can always be wrong. No one's right all the time. So if you want to stay in the game, you've got to keep reasonable losses and let the winners go.
And we have a very smart audience, but this might even be a little wonky and in the weeds for them. So why don't you guys tell us about where they can find out more about both of you, about some of your stock picks and some of your investment ideas. The websites, can you give us some websites?
Yeah, fantastic, yeah.
I'm on topstockpicks.com. So I give all my members a daily watch list on the top ETFs that I'm watching every day, as well as actual trades I'm making. So I don't just tell people trades after they happen. I tell them what I've made, and before I make it, I tell them what the trade's going to happen.
And I'm on jasonbondpicks.com. I'm a small cap guy. I am also trading real money, and I tell people what I'm buying in real time, wins and losses, and that performance this year is up over 300% verified. We show our E-Trade accounts live so people can see the trades as they happen.
Okay, let's pull up a stock chart of Twitter, guys, to get a quick update here. I see the stock up 16%. Again, this is on rumors that companies, tech companies, have expressed interest in potentially buying the company. We've seen Twitter hop higher a few times over the summer over potential buyout rumors. We saw it happen when Microsoft announced that it was acquiring LinkedIn for a pretty price tag. Twitter rose on that news, with some thinking that might mean that a buyout of Twitter would be in store as well. So Twitter's up almost, double digits now, while the overall market is flat. We want to talk about Amazon too. This is a consumer stock. It's technically a consumer stock, but with its foray into the cloud, I think many people consider it in ways a tech stock too. So anyway, Amazon shares soared over $800 a piece yesterday on Thursday, reaching an all-time high, and Amazon now has a market cap of over $380 billion, more than doubling the company's value in the past 17 months alone. Wow is right. Amazon's market cap is now the fourth largest in the world, only behind Apple, Alphabet, and Microsoft, and Amazon shares are trading higher. They've been helped, at least recently, by the success and growth of its cloud business, definitely the growth of its cloud business. Amazon Web Services, where it is very profitable and is expected to generate here, looks like $10 billion in annual revenue.
Yeah, they're just eating everybody's lunch out there. Any space that Amazon can get into, they're taking over cloud services. They're taking over retail, of course. any part they can get in, they're just taking over. So they are definitely one to be feared if you're a retailer out there.
Okay, so you're bullish on Amazon, I take it.
I don't own it, but I sure love it. I wish
I'm the
I
same
owned
way.
it.
I use it a ton.
You can look
My
at stock
wife uses
chart,
it
like,
a ton. We just had a baby. He's 9 months old. There's more UPS trucks coming from Amazon
yeah.
to my house.
Do you use the dash buttons?
It is just coming 24/7. My wife orders it all. I don't use it, but I can assure you, I see the bills. There's a lot of Amazon coming to
best.
our house. It is.
What are you gonna say about
we don't
it?
go to Walmart anymore. We don't go to the mall anymore. If we need something, we order it and it comes to the house.
So obviously the e-commerce giant, but also now
Yeah.
with this transition and this addition of the web services
Yeah.
and the cloud product, I think it is definitely the behemoth and making a way of its own in the cloud department, which is
A couple years ago, people barely talked about the website of it. But now, like you said, $10 billion. This is a huge business. It's growing fast. It's very profitable. So this is going to be a huge part of what Amazon is in the future, is just dominating everybody's infrastructure out there and managing their web services. So there's a lot to watch out for.
All right, guys. Well, thanks so much for joining us. Thanks for the intel. 300% return. I'm shocked. I'm in awe. I'm impressed.
Not every year, but this has been a good one.
Okay. All right, guys. Well, thank you for joining us.